How does the Federal Reserve affect our portfolio this week when they raise interest rates? Well, our margin rate is 5%. So on 200,000 margin, that like you see here at the bottom, 5%. If they raise rates by 0.25, then the effect is minimal, from 5% to 5.25%. And if they raise by 0.75 basis points, which is very unlikely because inflation is falling, then that would increase our margin rate from 5% to 5.75%, theoretically. And that would still be negligible long run, honestly, especially when you consider the dividends that we're making. You know, we're making 95 to 100,000 a year in dividends. So even if interest goes up by another 1,000 for the year, we're clearing more than enough in dividends to cover that interest. So, and they're all paid monthly. And this strategy helps beat the market, as you know, because as you can see below, we're up 20% for the year, whereas the market's only up 4.5%, NASDAQ up 8.8%. So this is a winning strategy, and that's not going to be affected much by the Fed's interest rate decision, because if the dividends keep coming in the mail like they do, what difference does it make if they raise interest rates? So yes, it'll make the portfolio have a shock. The market will go either up or down. We don't know. But we don't care if these go up or down because they're all pegged to the indexes. The indexes will generally move 1 to 3% on a given day. And, you know, that's what you expect in this account here. And today we're up 1%. So expect swings of up 1% or down 1%, or up 2 or down 2. It doesn't matter as long as we don't go below this number here on our available for withdrawal, which if that goes to 0, we're in a margin call. But that's very unlikely. The indexes would have to fall 50+% for that to happen. Plus I have my shorts and hedges in case that were to happen as well. They would offset some of these losses from these options, which are also tied to the indexes mostly. So this is what we're looking at. The market is looking very constructive above the 200-day moving average. That's Cornerstone, which tracks the market. Even if the Fed lowers rates tomorrow, the S&P chart is looking constructive. Yes, we made videos on how the fundamentals are constructive. We could go on and on about our positive reasons why the market should go higher in 2023. We'll just link it in the description below. But from a price perspective, on the chart, you can see we're above the 200-day moving average. It's the orange line. And we've actually gotten past it. This black line, which is, I believe, it's the 10-day moving average. That's gotten through the 200. That's a very bullish setup when moving averages cross through one another. The RSI is making a higher high and higher low. You never know. You could have an explosion to the upside tomorrow if the Fed lowers rates by less than expected. So everything is looking good in the market, even if the Fed raises rates, lowers rates by less than expected. Everything is looking constructive in the market, and the shock, therefore, to the portfolio shouldn't be as great as we've had in years past. Let's say in 2022, especially. So I guess we're gonna leave it here. Margin's low enough. Interest isn't affecting it. You know why we had this 30K jump in our account from the other day, and it's because we took on another loan, and you receive loans from dividends, which are the beauty of dividends. They act as qualifying income. So that's another way to grow your passive income accounts. Go see that video when you get a chance. Anyway, so our performance speaks for itself. You see the dividends we make. The Fed's decision doesn't changed our dividends, so we're not worried. And it shouldn't shock the portfolio much either, considering how positive the fundamentals are in the economy with inflation falling and company earnings staying relatively strong, combined with price action of the S&P, which is up above the 200-day moving average. So all these should provide a positive backdrop for a constructive market in 2023, even if tomorrow's day is somewhat volatile with the Fed's decision. So remember, nothing really ever matters. Forget anything I say. All that matters is passive income and collect those dividends. Tie your investments to the indexes, and there's nothing else you have to do except wait and collect the dividends and live financially free. So I hope you enjoy the video. Click like and subscribe, and have a good day. Thanks.